Yes, thanks, Dumasani. I think the impact of a 25 basis point rate cut per se is not going to be significant for households or corporates. I mean, the mortgage effect of, when you factor in the 25 basis point cut is about, I think it's about 180 Rand with a 1 million and home loan. But I guess, in the context where we are, everything is helping. Where we are see a bit of an improvement is, with the slowdown in inflation from, close to 5.5% to about 4.4% now, with meaningful petrol price cuts. So, we've got a small cut in the repo rate that combines with the fuel price cuts. So I think that helps to boost cash flows a bit. And then added to that is those that withdraw the savings from the two-pot.
There is now renewed hope of further easing where monetary policy is concerned. Is that likely to happen going forward? We heard from Governor Kganyago that the anticipation of inflation going down even further is stoking at least some sort of light at the end of the tunnel, that the South African Reserve Bank will continue to cut rates, albeit at a marginal level.
Yes, I think you are correct. It's very likely that the Reserve Bank will start this. They have started this normalization process in interest rates, which basically means that, the policy rate up to today has been very restrictive. And with this moderation in inflation to the midpoint of the target and even lower, gives them space to move, right? So they've put their toe in the water to see how everything evolves. We have seen the Fed delivering their 50 basis point rate cut last night. We have seen the ZAR remaining relatively resilient. So these are all dynamics that will play out in coming months, but it does pave the way for more rate cuts from the Reserve Bank.
That said, as we wrap up, Tertia, what could hamper the current projections as stated by the Reserve Bank?
I think, when you look at the near term, the inflation rate is likely to decline probably to about 3.5% in the near term. That will be driven by another petrol price cut in October, the very strong rand that will reduce core goods inflation, like, we will not see meaningful increases in the prices of vehicles, among other things. So that will definitely help to moderate inflation. I think one of the big risks when you look on a 12-month rolling basis, because the Reserve Bank focuses on where inflation is going in 12 months, right, is basically things like, where will the electricity tariff increase come out? What will happen to the oil price? What will happen to the rand? So because the external environment is very complex, right? So I think those are some of the risks that the Reserve Bank will continue to monitor.
Thank you so much for your input. Tertia Jacobs is a treasury economist at Investec, giving us some of her reactions to that repo rate cut at 25 basis points.